It can be a challenge to find a place to put your money for maximum returns, especially in the current environment. Inflation is high, costs are skyrocketing, layoffs are happening. Money's just tighter overall, and then at the same time, it's getting eaten up by inflation. So if you're not getting at least like 7 or 8% return on your money, you're basically losing money. So where do we go find these? Well, I'll go into a few options into a bit more detail. If you're already investing in the stock market and you have a good cadence and you're, whether you're a passive investor, active investor, you're probably already investing in the stock market or real estate or businesses. But I've taken a look at some alternative investments over the years, and here's a few that are very popular. And if you know what you're doing, you could get much higher returns as well. So the first one is peer-to-peer lending. Peer-to-peer lending is individuals or like pooled money that you loan directly to individuals or other corporations and bypassing the banks or financial institutions. They're usually delivered in the form of contracts, agreements. So if you have a chunk of money lying around and somebody needs money for a real estate deal or for whatever reason, you could loan them money and charge them interest on that. It can be structured all different kinds of ways. Interest-only payments or balloon payments. Usually peer-to-peer loans are backed by collateral, like an underlying asset, but not always. Again, that's going to affect your risk. Then there's alternative investments like hedge funds, private equity, venture capital. These are all ways for people, again, to pool money typically into a fund, and then that fund will go and purchase interests in other businesses or property or whatever the fund is, whatever that private equity or venture capital. They typically invest in, it's more startup environment usually, but not always. These types of funds usually have a fund manager. They're typically actively managed, and you pay a management fee, but often the returns, if they make good investments, can be really outsized. Then there's quantitative trading, which is basically algorithmic trading, also known as quant trading. And they're typically mathematicians that work out a code and algorithms that like automatically trade based on information. You can create your own if you're a genius, if you know math. But usually they're structured in a fund as well. These funds are not usually readily available. They're typically like invite only or closed funds. And a very popular alternative investment is cryptocurrency. I know it's been crypto winter for a while, but if you can understand what you're doing there, that might be something to look into. Cryptocurrency is typically very volatile, and there's no real underlying asset. It's hard to really determine an intrinsic value for cryptocurrency.